And Mark is a very integral part into my business, right? So you guys need to connect with people like him as well. Even if you are a creative finance investor like I am, and we don't like using the banks, it's always good to have a mortgage loan officer with you on your side.
Yeah, absolutely. And by the way, creative finance is one of the best ways to acquire properties. Like if you can not come to me for a mortgage, like,
Yeah.
man, I would never try to sell you on a mortgage if seller financing, especially, is on the table.
Welcome to the Mission to Wealth podcast. I'm your host, Tim Yu, and I'm super pumped to get my friend Mark Kong on this podcast today. So he's an Army veteran just like myself. He's done all the crazy off-market real estate transaction with flipping, wholesaling, but he made a crazy pivot a couple years ago to run his own mortgage company. So I'm super excited. So let's just get into it. Mark, what's up, brother? How are you?
Doing great. Thanks for having me on.
Yeah, man, dude, you got a crazy story. And also you're obviously an ex-Army officer as well. So you got some veteran, background to you. Kind of tell the audience something about yourself, bro.
Yeah. So one thing that sometimes people find interesting about me is I've kind of done a lot of different things in real estate. It's like, oh, what haven't you done? Well, I haven't got my appraiser license yet. So that's one thing I haven't done. But I think it's maybe just because I'm a curious person. If I don't know something, I want to know it or figure it out at least. So I started actually flipping houses. I was very lucky to find a mentor who was doing solely off market, all direct to seller marketing. And I essentially tried to just copy paste his business plan. So that included going direct to seller, polling lists, skip tracing niche lists, credit bureau level data, cold calling, and then saying, hey, owner of 123 Main Street, you want a cash offer on your house? The first wholesale deal I really did, I bought it for $100K, and then I didn't know how to do assignment of contract, so I double closed it, and I closed it the next day for $175, and I was like, holy shit, I just made
Oh my gosh.
or $75K, wholesale deal. And I was a lieutenant in the Army at the time. And I think that was higher than my lieutenant base pay at the time, and then eventually I got my real estate license because I really didn't wholesale after that, because I realized, I sold it to a flipper. The flipper made their back end profit. And I was like, hey, if I can make the front end wholesale profit and the flip profit at the same time, that's kind of best of both worlds. So eventually I got my real estate license because I want to list my own flips on the back end. And a very interesting thing happened, which is I was active duty Army at the time. And I realized that all these active duty folks that had either bought a house or had yet to buy a house didn't want to go to the realtor who's like posting on Facebook constantly,
Yeah.
call me to buy or sell your house, call me to buy or sell your house. I was not posting like, I'm a realtor. I would just post the flips I'm doing, me on top of a roof being like, hey, this roof costs 10 grand or whatever. And all these folks came to me for advice because I wasn't the realtor who was like, hey, call me if you want, like, right. Those posts, first off, like, have no value. And then you're not really branded as an expert. And so once I got my license, I started doing just so much volume just as a realtor. And, I'd work with other people at the brokerage I was with because I was still active duty. So I couldn't always go show houses, but listings are very easy to do with little time, right? Showing houses, beauty of lock boxes and Century Key and things like that. After being a realtor for a while and starting to represent buyers more, still active duty, I'd show up to the closing table and there'd be one Army captain, VA loan, good credit, show up to the closing table, he's getting 4%. And another Army captain, good credit, show up to the closing table, he's getting 3%. I'm like, what's going on here? Like, what goes into the mystery behind interest rates and lenders and fees and things like this? And so I decided to pursue my loan officer license for two reasons. One was like trying to figure out why one person was getting a certain interest rate and another borrower was getting a different interest rate. The other reason was to try to just figure out the ins and outs of financing because I really wanted to master the BRRRR process. The financing piece of that is, I think, the most difficult. Second to just having enough equity in it, right? Most people can't do the BRRRR process because they can't buy at a steep enough discount. Well, I had figured that out already. Like the buying at a discount was not an issue for me, but the refinance on the back end was more the difficult part. So get my loan officer license. I go and I hang it with the company that at the time was getting the most competitive rates for my client. And then after being at that company for about 6 months, I realized, hey, I can go and have better rates even than where I'm at.
Mm-hmm.
But what it would take would be starting my own mortgage company and dropping margins even further. And so lending is kind of a margins game, right? In order for a company to have better rates, at least the only way I know how to do that is to essentially make less margin on the loan origination, either on the front end or the back. And a lot of times clients don't really see that part of it.
Yeah.
So that's what I did. I'm very lucky to do that with a business partner who was at another lending institution, and he was tired of having bad rates. And we were both in the same Army officer network. And so when I told him what I planned to do, he was like, "Oh no, like we're doing this together," because he was tired of having, let's say crappy rates as well.
Dude,
And
that's
yeah, so
crazy.
that's kind of like the origin story, a little bit of how I ended up in lending.
There is so much to unpack in that 3-minute segment you just gave. You gave like a master class in how to market yourself as an agent. Because how many times do you see those agents post those Instagram stories or
Right.
posts that says just sold? Like that doesn't mean anything. Like why are you posting that, right?
Yeah.
You setting yourself up
Yeah.
as the expert was getting you more
Right.
business.
Yeah. And at least if you don't post anything else, you should post your just solds, right? And one thing I like to remind agents and people and lenders like myself is like there's a law called I think it's called Dunbar's law, which
Mm,
it's like a psychology thing of like you only truly exist to 150 people. Outside of 150, like everyone kind of just forgets about you, right? Like that's like close friends and family. Everyone else, like let's say I have 150 core folks. My other 2,000 friends on Facebook, I don't exist to them until I
right.
post, and then I kind of float back into their consciousness, and then I float out again. So yeah, if
Mm,
nothing else, yeah, post your just sold, right? It's better than nothing. Just remind people that hey, I'm a realtor in X city, and I help people buy and sell houses. So I guess it's better than nothing, right? But yeah, like in addition to that, what are you doing to brand yourself as an expert of like, hey, like I need to call this person because they're going to, have either the connections or, the expertise, like something that I need other than like have a real estate license.
yeah, no, that makes perfect sense. And then obviously you've done so many different things across the spectrum of real estate. And I think that in my opinion, and you could tell me if I'm wrong, all those experiences that you've experienced in the last couple of years, flipping, wholesaling, being an agent has made you into a way better mortgage loan officer essentially, right?
And not only did it just, let's say, make me a better loan officer, if someone was like, hey, Mark, I want to be a loan officer, I would love for them to have maybe done a few flips or been a realtor for a while. Because to be a good loan officer, you have experienced realtors coming to you for advice. And you should be able to square them away on things that maybe seem a little bit complicated to them. And if you just jump straight into being a loan officer, that learning curve and getting from beginner loan officer to someone who's actually providing tons of value and saving deals or helping to save deals for experienced agent, that like takes a lot, right? Like if I didn't have my flipping background, I did a deal this year where an experienced investor was like, oh, hey, I want to renovate a house. I'm also a veteran and I want to ultimately finance it with the VA loan. How do I do that? No realtors involved, right? And again, I can't play realtor, right? I can't negotiate things like that. But just having the knowledge from the loan officer side, like, was instrumental in getting this deal done. So ultimately, he bought it with an LLC. That LLC was a partnership. So if it was a single member LLC, and then he was to go VA loan, that would technically be a refinance because it's
Yep.
single member LLC into VA loan. But he bought it with the partnership and flipped it with the partnership 2-member. So if it's a 2-member LLC, then he can sell it to himself and it's a purchase and not a refinance
Oh
legally.
my God. Guys,
So
this is crazy.
just essentially, right? just knowing how he needed to accomplish his end state of, hey, I have a house that I renovated myself. I could pick my appliances. I could pick my countertops, X, Y, and Z. I don't want to do a VA renovation loan where the whole renovation process has to go to the lender, but I ultimately want to finance it with the VA loan, right? Like if I was a brand new loan officer and I knew the guidelines, like the guidelines aren't enough if you don't understand like the true implementation of it. So that's one example of like where I could brief them of, hey, here's how to do it by the book. And, here's what we have to do to get to closing. So that's just one very, very niche instance. I tend to do a lot of VA loans for folks that are investor mindset. A lot are not using a realtor. And those transactions are tougher, right? When you don't have a realtor involved who's helping to
Absolutely.
quarterback the deal. And so, yeah, I could not imagine being a loan officer and actually advising agents and clients on questions if I didn't have the multiple years experience just in real estate in general.
What you just explained with buying a property with an LLC, hard money, whatever, refinancing or selling to the owner, would that work for a FHA loan as well?
Yeah.
Okay, perfect.
So
So
with the FHA loan, you would run into the quote unquote FHA flipping rule. Uh, I can get into the nitty gritty of it, but an FHA loan has to be owned for a certain amount of time before you can even go under contract for the sale.
it's like what, 90 days?
Yeah, it's 90 days, but what a lot of people get wrong is it's 90 days before that purchase contract can be executed and signed. So what I've had folks do before is like, oh, 90 days and we're going to close on that 91st day. No, the contract needs to be dated after that 90 days.
Got it.
And then maybe you're closing like, 30 days from that. And so, yeah, I don't think it would work as well with FHA loan because of the flipping rule, but it's certainly feasible, maybe just on a longer timeline.
Amazing. Okay, and while we're on the FHA loan, everybody online loves to talk about the house hack. And a lot of people that follow me on my channels are like, I'm not a veteran, I can't do the VA loan. And I tell them, well, you have the FHA loan.
Right.
So can you kind of demystify the FHA loan and also debunk any fake rumor mill out there in the space?
Yeah, probably like the most like viral reels on house hacking is like some guy or gal talking in the TikTok voice of like, buy this threeplex or fourplex with an FHA loan, rent these units and live for free. And it's like, oh my gosh, that briefs so well, right? You know, our time in the military, like that's probably my favorite saying. Like, yeah, that briefs well. But man, like, okay, so what a lot of folks don't know is FHA for threeplex and fourplex only has to pass what's called the self-sufficiency test.
Okay.
Well, when rates were 2-3%, everything passed the self-sufficiency test. What's the self-sufficiency test? It says that whatever the appraiser, not what current leases are, but whatever the appraiser puts on the appraisal report of whatever these, let's say, 4 units should rent for. Let's say the appraiser says each unit should rent for $1,000. Well, that means the total rental income off that is $4,000, right, for a fourplex. You have to account for a 25% vacancy factor. So we take 75% of that, that's 3,000. And that has to cover the PITIA, principal, interest, taxes, insurance, and any HOA fee. And so now that rates have skyrocketed, almost no 3 or 4plexes pass the self-sufficiency test. In the last 2 years, I've closed one 4plex that passed the self-sufficiency test. And what they ended up having to do, because it did not pass originally, they ended up having to go get like over 10 insurance quotes and take the insurance package with the highest possible deductible and with the lowest monthly payment, because that insurance monthly payment accounts for self-sufficiency test, and it
Yeah.
barely passed by a few dollars, and we closed it. But
Oh my
it should
gosh.
not, under normal circumstances, even that property would not have passed the self-sufficiency test. Also, they had to go ask for the max seller concession amount and use all of that for a rate buy down in order to pass. So both having to pull the string of having an insane rate buy down to the lowest, most expensive rate on the rate stack, and then do everything possible to get cheaper monthly insurance. And then, so this
Wow.
idea of like, yeah, just buy a 3-plex or 4-plex with the VA loan is hilarious to me because it's so much more complicated than that. And what, before Fannie and Freddie changed their guideline to where conventional could go 5% down on 3-plex or 4-plex, and it can now, right? Any conventional buyer could go just 5% down, 3-plex, 4-plex. It's a great change, brings in a lot more buyers to the pool. Before that change happened, the VA loan was like the half for 3-plex and 4-plex because none of your conventional buyers could go low money down, and all your FHA buyers were largely out of the buyer pool due to Social Security tax. And then everyone with VA loan access just was a slam dunk on a 3-plex or 4.
Oh yeah, 100%.
So it was like this, like, hey, if you have VA eligibility, you're just pretty much just competing against investors that are doing 1031s. That's what I would see in the 3-plex and 4-plex market. It was like, if there were 5 offers on a property, it would either be just like VA or like a 1031 buyer. But now it's a little bit different because we do have more of those 5% down conventional buyers. Yeah, FHA loan is not as lucrative as people make it sound for 3-plex.
Yeah, I agree. I've been telling a lot of my friends that, either veteran or non-veteran, it's like if you got 5% down, put your 5% down in conventional. And the thing is, like, I'm trying to get people's minds to shift away from buying a multi-family residential unit. You can still house hack in a single family property. And I think people don't really, well, they're not being told that online, right? Like if you go buy a 3-bedroom house and you're like a 25-year-old dude or dudette, just get 2 or 3 roommates. You know what I mean? And then that's a house hack right there.
The time frame in which you can get into a single family too is so much sooner. Let's talk like whether it's conventional VA or FHA, you need reserves to buy a multifamily. So for example, on the VA side, let's say you have a lieutenant coming to your duty station near you. In order for them to close on, let's say a 4-plex and the total PITIA was $4,000 a month. In order to close on that, they need to have closing costs, etc., and then also 6 months of reserves of that PITI. So that's an additional $24K that they have to have set aside in order to close. Versus if they don't own any real estate, they can likely close on a single family house with no reserve. What they got in the checking and savings and asset.
Yeah.
Buying a single family now versus waiting a year to buy multifamily, I think for a lot of people is the right decision.
Yeah, man. Like I know a friend, he's a big veteran guy, influencer in the real estate space, and he talks about co-livings all the time, like using your VA loan, conventional loan, and turn it into a co-living. Now, obviously, everyone can't do that, but it's like you said, it's so much easier. You can get into a property now, especially rates are what, we can talk about this too, but how far do you think rates are going to go?
Well, they went in the wrong direction since October 1st. So we've lost a ton in the market on rates due to a very, very, very strong jobs report. So I think rates are going to not come down as far as people think they will. And it's funny that even since the Fed's announcement of the 0.5% cut of the Fed funds rate, actual mortgage rates have ended up since then.
Yeah,
And in the
crazy.
last 3 days, rates have ended up in a very stark upward trajectory. So, it's hard to say. It's really, really hard to say. If I had a crystal ball, I'd be on an island with the yacht.
No, I appreciate the feedback though, and honesty, because everyone thinks that it's on the way down in 2025, and obviously just like you said, since October, it's been actually ticking up in the wrong way. So that's always not good for us.
Yeah, definitely for me and my business, lower rates, it opens up a whole refinance audience that doesn't previously exist. So we've been lucky to do a lot of refinances this year, but it'll be interesting to see what 2025 has in store for us.
Yeah, I totally understand. So during this part of the show, we usually like to ask the guest, if you were to have one piece of advice for a new investor or someone trying to get in the game, What would you share to them?
Well, since you said investor, I preference single family over multifamily. Reason why is because you're going to have very few multifamily owners that are desperate or need to sell at a discount, right? It's very, and of course, there's going to be the naysayers that are like, oh no, I got a, 16 unit way undervalued. I wholesaled it for 300K. Like, sure, that's feasible. Like the amount of deals like that are out there can be made are so few and far between versus single family, right? If you think about what is the most expensive asset the everyday normal person could buy. It's a
Yeah,
house.
it's a house.
It's a house, right? What's the second most? Probably a car, right? What do cars do over 30 years? They depreciate and their value goes to zero. What happens to a house over 30 years? It appreciates and keeps going up in value, and whatever loans on it keeps going down. This seller is just like, let's say, just not just like the unprudent human whose their credit went to trash, whatever, and they have to sell their house at a discount, right? We have very smart, capable individuals that inherit 4 houses, and maybe they live on the West Coast and their parents' houses are all on the East Coast, and they don't want to deal with it, right? So houses are these crazy appreciating assets that your everyday people have huge, huge problems with because houses are difficult. They're difficult to maintain, but they appreciate in value. So if you're looking to get deals at a discount, single family is the place to be, in my opinion. But if you're really going to dive into investing in the single family space, you should take the time to teach yourself how to do it right. If you don't teach yourself how to fish out the gate, then you're skipping the core like lesson of single family investing.
Yeah.
So that's the one piece of advice I would give.
No, I love that, and I appreciate you sharing that because I agree, right? A lot of us start off in single family, like myself. I was a direct to seller guy, and I got burned on my first few deals because of the lack of skill in underwriting. And I think what you just said hits the nail right on the head. It is such a foundational skill that people love to skip over, right? If you can underwrite a house, you can eventually learn how to underwrite a multifamily. You can eventually learn how to underwrite an RV park, right? You can scale. Everything is a scalable skill. And just like flipping a house, renovating houses is a foundational skill that I think people should experience. So, dude, thank you so much. That is really good advice. So, other than like the investing side of the house and all that stuff, what do you got going on right now in your business?
Yeah. So the main reason why I fully pivoted to mortgages is because of the breadth and the number of potential clients there are, right? If I'm running a mortgage company that has amazing service and amazing rates, then the only reason someone doesn't use us as a mortgage company is because they don't know about us. And then we just have a marketing problem. And our customer service and our rates are the reason why, we closed just over 100 mortgages in all of 2023. And just in Q3 of this year, we closed 127. Like we're growing like crazy. And another part of that is expanding statewide, right? I helped someone close in Texas recently and they're like, oh, my sister's graduating from college and is about to buy in Virginia, right? Well, could I do someone's mortgage in Virginia? Absolutely. Right. And so if I was a realtor in Colorado Springs, which I was, right, I can service people that are moving in and out of Colorado Springs. But if you're doing a really, really good job and creating a company that provides like real unique value and you're multiple states, not just multiple cities, but multiple states, the amount of people that are potential clients is insane.
Yeah.
Everyone who wants to buy a house is a potential client. Everyone in America wants to buy a house. Like there's no shortage of potential clients. And if you have super competitive rates and really good customer service, like the way referrals can spread like wildfire is actually insane.
Yeah.
The biggest con of it is when we talk pros and cons, the biggest con is it's the furthest thing from passive income. It is the most active thing.
Yeah.
Everyone's got complicated files, right? There's almost no one who's like insane income, no debts, right? Because even the people that are, let's say playing varsity and doing a lot of investment and things like this, they're also like really out there leveraging debt. And so I'm working with savvy investors sometimes and it's like, oh man, your credit score dipped in the 600s just because there's so much debt deployed, right? So there's no such thing as like a super, super clean file, like in my book.
Yeah,
And mortgages are complicated
it
and
is.
underwriting guidelines are complicated, but the way referrals grow is crazy. So like my partner last month closed 14 loans. That's more than I've ever done in a month. Like 2 months ago, I had a pretty good month. I closed 12, but we can never do that volume as realtors.
Yeah.
And then the other thing I like about mortgages is like in real estate as an agent, there's sign crossing, which is like if an agent signs with someone, they can't, they're dating, like it's done, right? Like
Yep. Yep.
back off all realtors, right? Versus in mortgage, I could say, hey, I just asked to get you a second quote. That's it, right? And so anyone is like who's shopping for a house and they hear, oh, Mark has super, super good rate. And then they take a call with Mark, and Mark's just like, yeah, all I'm asking for is to get you a second quote. And right, it's so easy to compete in the mortgage space and kind of
Mm,
prove yourself, right? As far as having good rates, good service, etc. And then what happens then? You have potentially like 4 people in that transaction that are then future referral partners. Uh, you have the buyer's agent, the buyer, the seller, and the seller's agent. So there's been multiple closings where I've had good conversations with that listing agent on the back end, and the listing agent's like, dang, you saved that transaction. And holy cow, I saw the rate you got them. Like, that's insane. Yeah. Yeah. So there's the reason jumped into mortgages because like, yeah, I'm not going to make as much flipping houses, especially like per deal by any means, but it's a business that like, I think I can try to have or create like one of the best mortgage companies in the, in the country. I feel very confident posting on Facebook. If anyone knows anyone buying in 16 states, soon to be 30 states, hopefully, right? Like at least get a quote from me, right? And knowing that like we're actually going to be one of their best alternatives.
yeah.
It's very powerful.
Yeah. No, that's amazing, man. Like everybody needs to understand out there that when you're building a real estate business, right? Because I know a lot of listeners are real estate investors, you need people like Mark on your team, right? Like Mark is one of the guys that I work with, right? Like I refer him clients. He helps, my sellers on some deals as well. And the biggest thing is like you need loan officers, you need agents, you need it all. You need contractors. And Mark is a very integral part into my business, right? So you guys need to connect with people like him as well. Even if you are a creative finance investor like I am, and we don't like using the banks, it's always good to have a mortgage loan officer with you on your side.
Yeah, absolutely. And by the way, creative finance is one of the best ways to acquire properties. Like if you can not come to me for a mortgage, like,
Yeah.
man, I would never try to sell you on a mortgage if seller financing, especially, is on the table. Yeah, there's a lot of there's a lot of stuff out there in the creative finance space that is a lot of creative finance folks want to talk underwriting guidelines that they probably shouldn't.
Yeah.
So I pulled quite a few creative finance folks and I've offered to look at their seller sales packets and handouts. And so like I had one maybe about a year ago, and his packet said that once I start paying your mortgage, it immediately falls off your debt to income ratio
Yeah, that's a
on you
no-go.
qualifying for a new mortgage. Right. And so like advice to him was just take that out. Like you're having the seller sign this as kind of a cover your ass. Like just don't speak to their future financeability at all. Like that's not your lane to really talk through. So
Yep.
like if you want to have a sales pitch and talk through that off, not on paper, that's fine, I guess. I shouldn't say that's fine because it's probably, you're right. But as far as
Yeah.
covering their ass, right, at least it's, but if you put in writing, like, hey, once I start paying your mortgage, this is just going to completely fall off your debt to income for future qualifying for mortgage. Like that's actually like puts you in the hot seat
Man.
as far as liability. Yeah. Well, I think it's just assuming liability of like, you're not a lender. You're not a licensed lender.
Correct.
Like don't speak to the underwriting of their future loan unless it's going to like, maybe if you're going to do anything, like just copy something out of the Fannie or Freddie seller's guide. The only way to exclude mortgage debt on someone's application is if you can prove that that debt, and this is accurate as of the time we're filming this, which is October 5th, 2024, The only way to exclude that debt is if another co-obligator on that mortgage is paying that debt and has been for the last 12 months. So if you're on a loan with your brother, let's say, and he's paid that mortgage for 12 months, as a loan officer, to exclude that, I'd have to get 12 months of that brother's bank statements and show that that brother has paid it for 12 months. If a third party, if a charity has been paying his mortgage for the last 12 months, it doesn't count. Still have to count it against them. The only way if it's a co-borrower on that mortgage. So what I do see in the creative finance space a lot is people talk to the client's future financeability, and then it kind of blows up in their face. Reality is a lot of times when someone's buying creative finance, maybe they're catching up to a person's mortgage, and maybe that seller is just not meant for homeownership for a very, very long time.
Yes.
And maybe you put a 5-year balloon on it, and maybe that lines up with when they think they're ready to buy again, and they're fine being like, hey, I don't plan to buy in the next 5 years, and like, this is fine. I understand what I'm selling or the terms I'm agreeing to. So I love creative finance. I plan to take properties creative finance in the future, especially VA loans, because there's a lot of people that get into a house VA loan and then they don't want to be a forced landlord. And when they move, they can't sell traditionally because their net proceeds is going to be a negative 10K, and they don't want to be a landlord. Well, I would love to come in and buy that, not assume their loan. I shouldn't say assume because I'm not an assumption. It would be a sub 2. But if I do that, I'm just going to be very clear with them as far as like, hey, you're not getting your VA eligibility back on this. And, and maybe they say, okay, well, then let's do a 7-year balloon, right? So, just a word of warning to the creative finance folks of like, if you have something in your pamphlet talking specifically about future financeability, I would just take it out. I would leave everything else because you have so many sale points that solve the pain points of the seller and help them out that there's just no reason to assume the risk of being like, oh, and you can go get another mortgage, no problem. Like, just like that is just like tons of risk in there. And if you just delete those 2 sentences, one, they're probably false, and 2, it just opens you up to liability. So that's my spiel for
Dude, no,
finance.
thank you so much, because I tell people this too. I'm like, if you're talking to a seller, do not say that you're going to be good to go to buy a mortgage. I usually ask somebody, the seller, do you plan on buying a house after this? And they go, yes. And I'm like, this plan may not work for you, and that's okay. What I do recommend you do is go talk to a loan officer, right? And here's the thing too, is what we have issues with, and that's why I love having a guy like you in my corner. Because if I had a seller that was thinking about selling their house subject to me, I don't want to pass that seller off to a random loan officer that's not familiar with what I'm trying to do. Because like a lot of loan officers are just salespeople, and they're not the actual underwriter. So passing it off to someone like you who understands what I'm trying to do, you can actually do a deep analysis on that person's background, credit, all that stuff to figure out if they can actually qualify for a new mortgage, right? You're licensed and you got the experience behind it, and that protects us as the investor too, that we have their best interest in mind.
Absolutely. Yeah. And in some people's cases, especially if, let's say, they're selling subject to a VA and buying again VA, well, VA has very forgiving debt to income ratio. So maybe at the way the veteran's file is built, we can hit him for both housing payments and he still qualifies. So if his goal is just to buy another house that he already has lined up and the loan officer does a very complete mortgage application, there's a chance that like it still meets his or her goals. So,
Amazing.
yeah, I think that's a pretty good policy of like, hey, go to a loan officer, get an answer from them, because then you have that licensed person. You can hold their feet to the fire. If they told the client they would be quote unquote good to go, right? Yeah, it takes it off your plate.
So what help do you need? What are you working on that's, up in the horizons, and where can people find you, bro?
Yeah. The thing that clients get that, I had a client refer me yesterday, and they're like, "So do you have a business line that I give that?" I'm like, "No. Anyone who's working with me, realtor client, gets my cell phone number."
Let's
Okay, so
go.
that's part of the beauty of it. So the good thing about loan officers and realtors, we ain't hard to find, right? So my cell phone numbers on our website, evolutionmortgage.com. You can also find me on Facebook, Mark Kong. So yeah, feel free to connect with me on Facebook or shoot me a text.
Amazing. Dude, thank you so much for coming on the show. And then, guys, by the way, I will have his website in the description down below, along with the link to his Facebook as well. So if you guys need some mortgage advice or need another mortgage, dude, hit Mark up. He's the absolute GOAT. So appreciate it, bro.